Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris. I'm totally blanking out on your name, and I talk to you every day. Chris Dearborn, Managing Director of Nasdaq Markets Intelligence Desk.
Still me.
Still you.
Still me.
I don't know why I had a different last name than that. Anyway, thank you so much for joining me. It's time for our midday update, and I don't know, those markets in turmoil, lower thirds, just don't seem to apply today. We're almost back to all-time highs in stocks.
It's really uncanny how the market's just did a complete pivot, though nothing's really changed back and forth on the rhetoric, especially with the people were focused on the Chinese yuan, pegged over 7 to the US dollar. It's higher today. You really don't know what's moving the market the last couple of days. You're in the guts of earnings season, even though the majority of the S&P 500 is already reported with a better beat. What you have here really is a number of companies that are still reporting. You got macro fears on trade talks that are still out there. Currency is devaluing to the dollar. So what you have here is kind of a mixed bag. And really, when the Fed last week, when they cut only by 1/4 of a point, and they said, we'll see how things go, and people sold off on that. What you're really looking at is that they're keeping more bullets in their holster right now because the rest of the world is seeing a global slowing economy, and money's going to have to come to the U.S. And they're afraid if they push too hard, too fast on the slowdown here, on the tightening, that you might have fears of a complete recession kicking in. And we can't have that right now. And it's reflecting in the markets. Volatility is back on these fears, and you're seeing it the last couple of days. I mean, it's all green across the board today. Yesterday, it opened deeply in the red. You had a big futures reversal, as we talked about yesterday, before 8 a.m., and today it's just risk on. The volumes have been great, validating this move and the volatility, telling you that people are unsure. But most of the traders out there are day traders, macro, and vol traders. People who are shorter term in nature and not the longer term investors who are owners of stock instead of renters of the move. And what you're seeing here is that renters of the move movement being taking place. And the S&P, which we'll talk about in a second, is the exact epiphany of what we're looking at. You're only, 3% from the all-time high made last week. Yesterday morning, you're over 7% away. That move is tremendous. You talked about a 2% move in the S&P yesterday to the upside. The VIX going from a 23 handle to a 17 handle. We'll probably be at a 16 handle by the end of today on the close. And if this continues, you can see a 13 handle by the end of next week if this volatility abates. If it doesn't, again, you're only one tweet away. You're only one movement away. We could be back at 23. This is the new norm that we have here going on right now. It really hasn't changed for the most part of the year, but right now it's in focus because of the political pressures coming on. Oil has been really a non-event, especially with the Middle East situation that's going on there. I mean, China's taking oil from Iran right now, violating sanctions. But at the end of the day, oil's finally caught a bid today. You're up 2%. But really, it's being smoked on what's been happening. If there were tensions in the Middle East, oil should be at $80 a barrel.
Yeah.
But it's not. It's at 56, 55, 56. So what you're looking at is where are people going to put money? Gold, trading right at 1,500. It's taking a little bit of a breather today, just below 1,500 an ounce for the front contract. And what you're looking at is treasuries. And that's why the yields have been so crazy. You're at 1.75, give or take. Last time I looked, you're probably a little bit better than that right now because there's some inflows into the equities away from the debt. But with that, you're seeing the markets kind of unsure, and investors don't like uncertainty. They have to put the money to work by mandate. And with that, you're seeing movements going directionally, either significantly up or significantly down. And the volume validates that there's people involved, but again, it's mostly day, macro, and short-term traders.
That's why it's been interesting to follow the Bitcoin market as well, looking at that as almost a safe haven asset. That's a conversation for another time.
We'll talk about that tomorrow.
Let's pull up our S&P 500 chart. Dale, we looked at something similar yesterday, but again, paying attention to those moving averages.
Yeah, this move today is significant. We're even higher than when I pulled this chart earlier today. We're pushing into that 50-day moving average. What you see here is that the 100-day moving average, we closed above it. We're above it today, and it's a big move in the S&P. It's almost too much of a move in the last couple of days. It's telling you that the sell-off is really fear-driven and nothing really that you can sink your teeth into yet. If you looked at a lot of the pundits on the markets, whether in the papers or TV the last couple of days, they're like, I don't know what happened. You're pointing at things. You're pointing at the southeastern, the nations, India, Thailand and New Zealand cutting rates a little bit more than expected in that southeast area. But what you really have here is uncertainty. People are trying to point a finger at something, but they're not really sure. Any one of those items in and of themselves alone is not a big deal. If you put them all together, it just goes to the global slowing economy that we've been talking about for almost the entire year, and it's just continuing to build upon itself. The unemployment numbers out today for the U.S. were still good, in line. The consumer credit numbers came in light yesterday, very light at the end of the day, just over 14 billion. They're looking north of 17 billion. So consumers been driving this market, right? GDP is 2/3 consumer spend. If that starts to pull back a little bit, that could ping GDP. With China not buying ag from us right now, especially on the soybeans, that could definitely ping GDP coming in soon. So you have fears, but if you look at the S&P right here, we're coming close to the 50-day moving average, 2933. We're there now. If we close above that, this move the last couple of days is wiped out, and we're going to have a retest of the old highs.
All right, Chris, we'll catch up tomorrow. Thanks so much for joining me. And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.